What is going on YouTube? Welcome back to another video. This week we'll be carrying out a market breakdown analysis for gold, silver, EURUSD and Bitcoin, and just kind of give a breakdown of where I am at the moment, what trades I took this week, and just a forecast for the upcoming week ahead. Let's get into the video. So onto the monthly time frame. So gold is currently surprisingly pushing up again, closing the week pretty strong. On the monthly time frame, you can see that price could revisit this 5600 level. As you know, it topped out at this high at 5600 on the monthly time frame. You can see on the monthly time frame we are up. So dropping down to the weekly time frame, just applying on a 25/5 moving average just to kind of gauge where price is, only on the higher time frame bias. And again, yeah, you can see that price is just pushing ridiculously. We've got local expansion, Fibonacci extension, which we did, and I'm going to keep that in play because it acts as a local level. Dropping down to the daily time frame, we also have our local January monthly level that we can pay attention to. So you can see quite nicely on the daily time frame that the 25/5 is acting as a nice area of interest for buyers to step in and buy the pullback of this move. You see, you could have entered a few positions here, entered here, entered here, quite nicely. So yeah, gold on the daily time frames currently pushing up. Now, in the last couple of weeks since of the sell-off, I would say that we were selling off quite deeply and kind of consolidating out of the retracement that we had. We revisited this local contracted objective point and currently bouncing above the standard objective point on the daily time frame. So yeah, gold at the moment is trending asset, which hopefully continues to go up. So essentially this week I had a look at what opportunities could present from the sell-off that we had last week or at the start of February. I didn't take any trades during this period, so the only time I really took positions was within this region. So if you drop down to the hourly time frame, so the local high we had was 5600. So when you draw a retracement resistance expansion, you know that the 618 or the F5 retracement is going to act as an area of resistance. Now, knowing this, price is pushing up to that area of interest because price pushes to areas of liquidity, as we know. So in the imminent shorter term, I would say wait for price to break out above this local high and see what it does above this region at 5100. If we clear 5100 and break these highs, then we are definitely valid for some buys. So I'm just going to keep a note here for next week, which will be the 23rd of February. So if we break out above local higher highs and also the local F5 resistance, then we can set up for buys, because that is what's telling me in terms of resistance. That's the nearest local resistance that price can go to, which will be 5100 and then 5500 at a later stage. So in the imminent shorter term, I'd say look out for buys and look out and wait for price action to confirm a breaker structure. I'd say on the 4 hourly time frame more than anything. In terms of the setups that I took this week with gold, I thought price was going to push here, so I tried to enter a buy position, but at the time of this there seemed to be an issue with the broker on TradingView, so there was a gap in the actual placement of my order. My order was meant to be filled at 5091, but I actually got filled at 511. And eventually I think there was some sort of news which happened during this period which kind of led to a stop out. So, I mean, the risk protocol was 1.2%, so you could say to some degree it's a fair risk trade. Then moving over to the next trade that I took, which wasn't a part of my system, and I shouldn't have technically traded this, but I just wanted to see what it would do, if this F3 reacted, and initially it did actually bounce down, and in terms of your risk profile, it was 0.63% risk on that trade, but then eventually I got stopped out, so which was fair enough, you know. Technically I shouldn't have traded this move, nor should I have traded anything during this week, because even if I had entered here, you would have got blown out by this candle. So that is an area of liquidity, and price just wicked out all the stops in that area. So overall, my live account is down in drawdown at the moment. It's a difficult time in the markets, and at the moment it's just kind of priming yourself for the right opportunity when the opportunity presents. So in the imminent short term, I don't really have any action to take aside from waiting for price action confirmation on the higher time frame bias, because this looks like it's going to compress up and push back up to the highs. Because if you do an expansion wave of this lower low where price stopped, and then the expansion here, so we've cleared 5081, which is a close above that level. So the key thing is that we close above here, and then we can target 5300 and then 56 or 5700 if that does come at a later stage. In terms of the highest, the technical pullback from where it is from its higher high, or the highest point of where price was, is currently down 8%, and the deepest retracement was 22%. So just bear that in mind when you typically buy assets like this, which trend over a long period of time. It's good to technically buy pullbacks if you ever think about it in the future. Moving on to silver on the monthly time frame. So silver on the monthly time frame, you can see the expanded push that we had, and a huge wick. I mean, I'm talking on the monthly of January, that wick is 42%. You know, it's quite frankly crazy if you ask me. You could say the pullback could be a good time to enter. I mean, if you draw a local support retracement here, would you look at that, would you look at that? The low of this candle was 64, and if you had entered a buy at a F5 retracement, there's your money, you see it right there on the weekly time frame. You could have entered right here and you would have been cleared. Turning on the SMA on, or the displays, the simple moving average based on the Napoli forms, you could see, I mean, this is just ridiculous. It really is. Imagine you just knew about this level and price tapped into that area of interest. So on the daily time frame, you can see that price has tapped in, and at the minute on the daily time frame is actually down, so it's not actually presenting any setups for longs in the imminent shorter term. I would say on the daily time frame not to look out for any buys yet, though price is currently gonna meet a local F3 resistance level. So if we get anywhere between 86, we know that that's a local area of resistance. So I would say definitely keep an eye out for that. And you can see in the imminent shorter term where price has sold off, wanted to sell off again, revisited this F5 retracement, and you could potentially break out here, which would provide you with an opportunity for a buy if we break out the local high, or even if you entered the local SMA buy, that would have been good too. But in the imminent shorter term, even myself, I think this week you could say technically you had probably a valid opportunity here, definitely to buy. You could have entered on this, and your risk profile is quite a lot, 1.7%, but your risk to reward is there, in the imminent shorter term, kind of just wait for further price action to develop, further price action confirmation. Yeah, and then kind of see where price will go next. So in the imminent shorter term, for myself, I'll just keep an eye out on the level for 86 to see if anything further would happen there. So we'll just put here for the 23rd of the 22nd, keep an eye on the F3 retracement on the H4 and see what price does develop there. I personally am not going to enter any positions on silver till I see any confirmation this week, or well, next week should I say. So from all-time high, we're currently down 30%, which you know you could say technically is quite interesting. If you buy a long-term assets such as silver, definitely could provide you with some sort of value in the future, again similar to gold. Currently down from all-time high 47%, but in terms of current price action, it's down 30%. So it could be a good opportunity to enter in the long term. But again, wait for further price action confirmation before you think about entering any positions. And if you do enter buys, or if I do plan to enter buys, I'll be looking for an expansion of this local lower low, because that's where support retracement came in. So then you would see an expansion of this wave to provide you with some sort of clearance. And now the most important thing is that we see that from the resistance retracements that we've drawn, that an F3 and a COP level both meet. So I think in the imminent shorter term, 85 and 86 will provide a significant amount of resistance. We could technically confirm this with a volume profile if it would allow us to, just to kind of sense check if it does agree. If not, hey ho. And to some level of degree, it is showing a bit of volume within that region, you know, value area high being at 85. So definitely got an area of resistance, but we see that the point of control has been taken by the buyers in the imminent shorter term. So I'd say keep an eye out for what happens here, like I said earlier. So yeah, that's that for silver. And moving down to EURUSD. So on the monthly time frame, EURUSD currently not really a trending market, as we know, EURUSD, but in the weekly time frame, you can see that price is to the upside, you could say mostly. The SMA is providing us with that upside. Dropping down to the daily time frame, we have a local area where I've drawn an expansion retracement to the downside, but that is no longer an area of support. In the imminent shorter term, I would say price is now testing a 25 by 5. We can also delete this and look at areas of support to see where price will head to. We know that this area hasn't held on the daily, nor has this. So we've got one higher low here, or you could call this your first reaction point, and then you've got another reaction point here, another point here, and then again another point here. So again, we could see some sort of significant support within this region, but in the imminent shorter term, EURUSD doesn't really move a lot as a pair, as a forex pair. So in the imminent shorter term, if you drop down to the 4 hourly time frame, we can look at areas and see where price is headed to. So towards the end of January, price initially pushed up, made a breaker structure, and now cleared liquidity, pushed back down. So I would say, because of how price wicked and sharply reversed here, I would look at areas of interest here. So we know that, okay, cool, a COP level is local, and if you draw a support retracement from this lower low based on the Naples levels, an F5 is no longer holding, because you could say that candlestick close of the breaker structure has been confirmed. So we are technically lower than that, but we're struggling within that region at the minute. So on the 4 hourly time frame, I'd say yeah, we see the breaker structure which has happened, but price is just there's an indecision between sellers and buyers within that region. So dropping down to the hourly time frame, you can see the trend is down, and price retested this. You could call it an area of interest or a supply area. Pushed back down into it, made a breaker structure again. Kind of did a similar thing here on the hourly time frame, where it tested this breaker structure, retested it as an area of interest, broke down, and again. So it kind of moves in a similar pattern where it just constantly forms, breaks a structure, and then retests where you can enter. So you could have entered at any of these areas. You could even enter here on a shorter term scalp. So if you knew about these areas, you could probably have entered a short here, you know, providing that the higher time frame bias and the trend is still down, dropping down to the 4 hourly time frame. So I would say, because of how this is rejected off of that breaker structure, I would say keep an eye on the local level and see if it pushes further down. Yeah, so in the imminent shorter term, I would say for myself to not really partake in this unless the sellers do continue to push the market down to maybe this local level of 117331 for EURUSD. I don't technically like to trade USD that often, but if it's there and an opportunity presents, potentially I would take it. But in the imminent shorter term, I'm still currently testing a scalping strategy and back testing it in the imminent shorter term. So that's that. With Bitcoin, I'm currently in a long position in the longer term. As we can see, price on the monthly time frame is currently bouncing above 68 right now. We've rejected it as a week. The lowest low was 59k that price hit in terms of a price action target. We still have the monthly time or the monthly candle which needs to close in 6 days. So you can see that the trend is down on the daily and on the weekly. We've made a weekly breaker structure, but price has tapped into an area of interest. So in the imminent shorter term, your first reaction point, I know straight away, is when you're looking at this lower low and you're thinking, okay, cool. You've got 57 as an area of interest. 83 is no longer held. We've had a breaker structure there. So we know buyers are stepping in within the area of 59 to 60k. Dropping down to the daily time frame, I'm just waiting, and I've got my stop loss at 48, and I don't think that price will go as low as 48. Again, this is a longer term trade, something that will hopefully play out in the longer term. And just kind of see where price action develops, and the overall trend, yes, we know is down on the higher time frames, but again, the small scalp position which I have will ultimately provide some sort of indication whether if buyers or sellers push this market. But for me at the minute, just of how price has fallen down, the reason why I'm in a buy is just to kind of hold for the longer term, like I said earlier, and see if I can actually get any gain out of it, because I know 69, 68 is a level of interest. And typically, you know, from such a huge sell-off that we've had from all-time high, Bitcoin does tend to push back up, but we know that it's an asset that can be skeptical at times. So from a 46% retracement to the downside, I think it could be a good opportunity to still enter some longs in the imminent shorter term, but not huge leverage longs. You know, I'm talking small dollar cost averaging, you know. But yeah, we'll see how that plays out. And yeah, that's my analysis for this week. And yeah, I hope you guys have another profitable week. Keep it strong, keep it steady, and let's see what the market provides with us next week. And yeah, have a good weekend and good week ahead, ladies and gentlemen. Take care and peace.